Hey everyone, welcome back. Today we're diving into the Help to Buy scheme in Australia, a neat initiative for first home buyers. It's basically designed to help reduce loan sizes with just a 2% deposit while the
Yeah,
government chips in.
right. So we're talking about a shared equity model where the government contributes up to 40% for new builds and up to 30% for existing ones, right?
Exactly. Um, it's kind of like if you're buying a home, instead of shouldering the full mortgage burden, you get a helping hand, but you share in the property's eventual profit if it
Yep.
goes up in value.
So it's really about lowering that loan size, which brings down repayments and even saves you from lenders' mortgage insurance. That's pretty smart, don't you think?
Oh, absolutely. It's like imagine you're running a race and instead of lugging a heavy backpack, somebody's there to lighten the
Yeah, I get
load.
that.
But then when you finally cross that finish line, you owe them a share of your winnings.
Right, because the government doesn't just gift you the money, it owns a part of the property. So if it appreciates, they're along for the ride.
Yep, that's the trade off. And speaking of which, the scheme comes with a list of eligibility requirements. You got to be an Australian citizen, at least 18 years old, and your income needs to be under 100K for single buyers or 160K for
Exactly.
couples. Plus, you can't already own property.
Mm-hmm. And don't forget about having that upfront 2% deposit as well as additional costs like stamp duty and legal fees. That all adds up, doesn't it?
It does. So it's like you need to have some funds ready aside from the deposit the scheme covers. But here's where it gets interesting. In New South Wales, for example, there's a recent update.
Right. Yes, I saw that. The Nes Dollars Parliament just passed some enabling legislation, meaning around 3,000 eligible buyers in Nes dollars can take part yearly, as part of a broader national rollout with 10,000 spots available annually over 4 years. That's huge for indicating government commitment, isn't it?
Definitely. It's kind of like um, having your ticket to a popular concert, but only a limited number are available, so you know it's exclusive.
Yeah, exclusive indeed. True, but one thing that I've been pondering, doesn't sharing ownership also mean that when you sell, a portion of your profit goes back to the government? In a rising market, that might feel like a bit of a setback.
I get what you're saying. Sure, your profit is shared with the government, but for many first home buyers, just getting into the market is the real win. It's a bit of a trade
Exactly.
off. You're reducing your loan and repayments in exchange for sharing in the upside later.
Yeah, and not every bank takes part in the scheme, so choosing an approved lender is another piece of the puzzle. It's important to do your research on that front.
Definitely important. I love the analogy of it being like a recipe. You need the right ingredients and instructions to get the perfect dish. Here, your lender, deposit, and meeting those income thresholds all mixed together to create eligibility.
Mm-hmm, exactly. And then there's the specifics about property price caps. These vary across states, which is super important for potential buyers to note.
Right? In New South Wales, for example, you've got a cap of 1.3 million in regions like Sydney and Newcastle, but only 750K elsewhere. Then in Victoria, it's 950K for Melbourne and
Yeah,
650K
it's
in
crucial
regional
information.
areas.
Not to mention Queensland and the ACT. In Queensland, it's $1 million in Brisbane and 550K elsewhere, while in the ACT, it's a flat $1 million cap. So if your dream home is above these limits, well, the scheme just doesn't apply.
Exactly. It's like having a spending limit on your shopping spree. If you go over, the discount doesn't kick in.
Yep, that's a perfect analogy. Right, planned budgeting really comes into play here. And then, coming to the final part, what's the catch for buyers? I mean, aside from the shared profit aspect and the approved lender requirement.
The key catch really is the trade off between the immediate benefit of a lower loan and the long term commitment of sharing a slice of your property gains. Plus, you still need to have enough saved up for those extra upfront costs.
Mm-hmm, absolutely. That's an important factor, and it's especially significant for folks who feel locked out of the market. This scheme could be a lifeline, but only if the numbers add up for their situation.
Right on. It's like finally getting a door cracked open after years of being shut out. But you have to remember the person who opened it gets a part of the view,
Yeah,
and the
I
view
like that
being
analogy.
your potential profit.
So, who would you say is the ideal candidate for this scheme?
If you're renting and have managed to scrape together even a modest deposit and you feel like you're being priced out by traditional finance options, this might just be the tool you need to get into home ownership.
That's spot on. But critically, it's not a one size fits all solution, right? It really pays to speak with a mortgage professional who understands the ins and outs of the scheme.
Absolutely. Like any financial decision, a tailored approach matters. Just as you wouldn't use a hammer for every job, you wouldn't rely solely on this scheme if your circumstances
Yeah,
don't
that's
match
a
up
fair point.
perfectly.
Now, here's a thought though. Do you think the shared equity model might discourage home buyers if the market really booms later on? There's a risk some might feel they're giving up too much of their future profits.
I can see where you're coming from, and it's a valid critique, but at the same time, for first home buyers who otherwise may never enter the property market, it's like taking a small slice now for a chance at stability. The alternative might be staying locked in the rental circle indefinitely.
It's a balancing act indeed. Yeah, I've heard it put that way too. A necessary compromise when you're starting out. It's not perfect, but it could be a stepping stone rather than the ultimate solution.
Exactly. And let's not forget the potential for the scheme to expand its reach. With about 10,000 spots available nationally each year over 4 years, and states like New South Wales actively rolling it out, there's a tangible push to increase accessibility.
Right, that's encouraging. So, what do you say to those wondering if they should consider this scheme seriously?
I'd say if you're feeling squeezed by the market, even if just by the rental trap, and you've got that 2% deposit sitting there, it's definitely worth exploring further. Just keep in mind the future considerations like shared equity and the strict eligibility criteria.
Yeah, it's all about timing and preparedness. And as always, it's essential to run these numbers with a professional who can customize advice to your situation. No one size fits all here.
Exactly. Think of it like this. You're not just buying a home, you're entering into a joint venture with the government. So clarity is key
Right
from the
on.
get-go.
I'm curious though, do you reckon there might be ways to improve the scheme in future iterations to make it even more attractive?
Potentially. One idea might be easing some of the cost requirements or maybe broadening the price caps based on regional variations. But of course, that'd require careful balancing so that the government still manages risk.
Yeah, that's a tricky balance for sure. Yeah, it's a fine line between providing help and encouraging overvaluation in the market. Some critics argue that if not managed correctly, the scheme might distort market dynamics a bit.
True, and while that can be a concern, the intention really is about giving those who have been priced out a fair shot at home ownership. It's like lending someone a ladder. Sometimes you worry they'll lean too
Exactly.
far, but without it, they might never climb.
Overall, it's a pragmatic step in a rather challenging market. And as you mentioned earlier, if you're in that position, renting and with a modest saving, it certainly opens up a pathway.
Right, and while it's not a cure-all for every housing affordability issue, it indeed provides a much-needed lifeline in a tough market.
Absolutely. So, to wrap things up, for those listeners sitting on the fence, explore your eligibility, crunch the numbers carefully, and chat with a mortgage pro to see if the Help to Buy scheme is your ticket into home ownership.
Couldn't have said it better. If you need guidance, reach out to your trusted team. Sometimes a bit of expert advice can make all the difference.
Yeah, totally. All right, folks. That was a deep dive into the Help to Buy scheme. Thanks for unpacking all the details with me. It's a lot to take in, but hopefully it all makes a bit more sense now.
Absolutely. Thanks for tuning in, everyone. Keep questioning, keep exploring, and remember, making informed decisions is key. Catch you next time, and have a great one.